Hello everyone, Joshua Hayes at BigWaveTrading.com. We'll do an overall market review. We'll look at last weekend's one new swing trade, and I actually have another swing trade idea. It's not the best, and I'll review the weekend video lessons, previous long signal and CRS, and this past week I was able to get 25% of my account into one stock because I considered it a grade A setup. It's working. We'll review that one for everyone because that was members only. And then we'll review the new long position, which is not quite like the other two. But first off, let's just look at QQQ on my chart. I like to look at my tickets indicator and my time segment volume indicator. And overall, we're just going to keep it simple on this setup right here. We have the tickets indicator below the zero line, currently stair stepping down on the QQQ, and we're below the zero line on the QQQ, and we're red. So we're double red. We're below the zero lines on both on the QQQ. So that tells us about the internal strength with regarding momentum and trend overall right now. So right now, it's not good, right? Okay, so let's look at the SPY. SPY, hey, we've got our tickets indicator starting to stair step higher. That's excellent. And our TSV flipped green today. That's good. But they're both below the zero lines. And as this indicator goes, price should not be above the 50 if this indicator is below zero. So I assume we're going to have more backing and filling. I'll show you my resistance levels on the chart, but we did break out above a downtrend line, so that is at least step one. But overall, some good, some bad. You take it all, and there you have the current market. DIA, green and green, but below the zero line on both. But lately, the DIA and the IWM has been showing some relative strength until today when the QQQ reclaimed relative strength. But stair stepping higher short term, and we're green short term, but we're still below the zero lines. So that basically tells me that we're good to go off the lows, but we're going to have a lot of resistance levels to deal with and chop ahead. So with that being said, let's go ahead and turn it to the telechart version 24 charts. And here's the SPY. The SPY, I drew out a shoulder, head, and shoulder. We need to get above this shoulder, the right shoulder, to be 100% in the clear. But as of right now, our little downtrend line is broken. That is bullish. But previous resistance, new support, back to being resistance, we're right back there. So we have some good, we have some bad. It is what it is. As we move into earnings season in February, I expect more chop. I see a lot more positives in leading stocks than negatives, but they might have a tough time exploding higher without being choppy, and or I wouldn't expect explosive moves until the market can clear this resistance line. And even then, we need to get above the high of this control candle here. And then after that, I think all-time highs are in the bag. QQQ, I did like that we broke above this downtrending line, but intraday, once again, we don't have those strong closes. You can see here on the SPY, nice gap up yesterday, we closed. Nice gap up today, stronger close than an open, but still overall, it's kind of like a spinning top doji candle. It's not the best, but the QQQ is at least above that downtrend line. IWM and the DIA still has a lot of resistance, and you can see the DIA is finding a spinning top doji candle right at the 50 SMA. So there is some good, there is some bad. Now I want to update everybody on the CRS position. CRS was given out in the video lesson last week above this high or this high. It's splitting hairs right here. We entered the stock after day one, took some profits, split up my stop from here to here on the remaining position. Then once we had this candle, I moved my stops to break even and this low day on the remaining position. Since then, nothing really has changed until today. I'll be taking more profits today at the market at the open on Tuesday. I'll have one stop here. Let me go ahead and now get rid of this line since you know where the entry line is. And then my final stop now is here. So on the position, my final stop will be for about a 5% gain, and my at the market sell order will be for about a 10% gain. Like I said, nothing amazing, but CRS is a, you know, over $100 stock. So we shouldn't really expect any kind of explosive moves. Now, the other stock that I actually took a very large position in, about 25% of my account capital, was VERX. VERX bounced right off the uptrending 50 SMA. And what I like the most about it, we were in a tight squeeze. On my weekly indicators, we were above the zero line. Even though this one's red, we're still above the zero line on all. So we had a great moving average stack, great setup regarding the TSV, MACD, and Chaikin money flow. And on a daily, we had a tight squeeze as we rounded out off the 50 SMA. So I split the orders up to above the closing price and the high of the day. Those filled. If the lower one would not have filled, I wouldn't have had 25% of my account in here. Probably would have had about, 12%. But since we now know where the entries are, after today's session, since getting long, we'll go ahead and calculate it from the high of the day. We're now up about 5% on this position. I'm going to go ahead and take some more after this big update. I took some off at the market. I'll be selling some more at the market Tuesday morning. And then my trailing stops go as this. With the first green line that you see below this low, and my final stop is now below the 21 EMA. This will allow me to leave the position without any losses and gains only. So that's how VERX and CRS has played out. These have been the best two setups the past week. I did not size up in CRS. I got about 10% of my account capital into this one. VERX was the size up. Now the new long position this evening is going to only get about 5% of my account capital. But before we do that, I wanted to show you how VERX, with that tight squeeze, why this is so great. It was missing two conditions on the weekly time frame, but this scan looks for everything to be aligned. So all my moving averages have to be stacked. We have to be in at least a medium squeeze for a long period of time. And on a weekly, as you will see with all of these, I have to be triple green. And also on a weekly, I have to have the proper moving average stacks. So all of these currently in this list, only 5 stocks out of a universe of over 10,000 that I scan are in the scan. So they all have to be triple green, moving averages stacked, and on a daily in a squeeze. And the newest addition right now is FSTR. Is it actionable? No, because it's not at its 21. BYRN, this one showed up on the scan on this day. Told everybody I have an alert set at the 21 EMA. So far, haven't gotten that alert. CCB, since entering the scan, so far haven't gotten that alert. TATT, though, I want to show you guys how you could have played this. Got below the 21 EMA, remained in the scan. A rebuy of this 21 EMA is good for a 10% move. PPTA is currently at the 21 EMA. I'm thinking about calling on this as a new long position above the high of the day. I haven't quite decided on it yet. But why I like this scan is because recently GEO was in the scan. And even on this day here, you can see it's got the squeeze condition, the proper moving average stack, even though the 9 EMA is moving down. On a weekly, we're triple green. Getting back to the daily, once again, below the 21 EMA, reclaims the 21 EMA. It's been off to the races since. GEO is up 29%. So that's why I like the scan. Why do I bring that up? Because the new long position, ACM, is close. It is now in a tight squeeze, now has the amount of squeeze dots, red and yellow, to make the scan. It has the proper moving average stack almost, and that's the problem. It's almost. Weekly, we're not triple green, but we are above the zero line. We do have the proper moving average stacks on the weekly time frame, but on the daily, ACM is below the 50 SMA. That's the key difference. VERX was above the 50 SMA. CRS was above the 50 SMA. Those are the stocks that I'm going to love. ACM is an excellent signal off the lows. with the squeeze, but with us being below the 50 and having this price resistance level, it's not quite as strong. So how I'm going to skin this cat is get long above the high of the day only. And if that triggers and fills, my first stop is going to be here. Then I will have a second stop here and a final stop here. I also want to see it work immediately, or else I'll probably sell a quarter at the market and just get out, keep all that capital, and move it to the next great signal. Maybe BYRN will give me a great signal. It's getting there, it's close, but not there yet. ACM is a new long today because of that huge volume surge, with us being right on top of the 21 EMA. But even the 9 EMA is not above the 21 EMA. So you see how I'm stacking everything in my favor or against my favor to depend on how I'm going to modulate my position size. So ACM is a new long above the high of the day. If you want to stay safe and only buy on strength, you wait to buy it above the 50 SMA in this high. But either way, it's not a great setup, but it is my only setup on a quality long side. Has a 96 earnings per share rating, has a 95 composite rating. It's over $100 stock, so it's quality. But we don't have everything aligned like CRX and VERX, so keep that in mind. ACM, if it doesn't work immediately, I won't be upset or shocked. But that is my trade idea for the public going into Tuesday session. Have a wonderful rest of your long weekend. I'll see members back in the chat room on Tuesday, but actually, I'll be around all weekend like always.